called cost accumulation. So this is management accounting. I'm just taking you guys a little bit higher, hoping that, yes, that is where you belong in the advanced management accounting group. So we are doing a cost accumulation. So under cost accumulation, we must know how to account for materials, labor and what here? Overheads. So currently we are still working on the materials. So materials, I've shown you how we normally do the material stock levels, that I've shown you how to get the stock levels. I've shown you how to do material valuation. No, valuation not yet. Yeah, we haven't yet done that. So of course we are looking at material control, the concept of minimizing material costs, inventory costs. Specifically, we are looking at the famous what here? Economic order quantity. So is there somebody who is able to remind us the formula of getting EOQ? EOQ equals what? Yeah, please, Sarah and the rest, try sharing this link that you guys have used to join, or rather to the normal. I want all the normal paid group students here to attend. Yeah, please circulate it very fast and tell those young ninjas to join. So some students are telling me that Mwalimu, I may forget the formula of EOQ, but I will never forget the fact that it has got a square root. It has a big square root, isn't it? So then we talk of 2D core over what here, somebody? HCS. Remember, D stands for what here, somebody? Annual demand, right? CO stands for cost per order. And then HC stands for what here, somebody? Holding cost. Thank you so much. So as a quick reminder of what we were doing in our last class, before we look at the EOQ with multiple discounts, I would want us to look at 2 questions. Hopefully we have done them. If we have done those questions, it will be very, very good. So as a quick reminder, let's look at April 2024. April 2024, question number 3C. Question number 3C. And you guys haven't told me that my office is beautiful. Does it look nice? And not yet. We shall reach there, isn't it? Yeah, great. April 2024, question number 3, cow. Have you gotten that question? Have you gotten that question? Yeah, you need to have it online. April 2024, question number 3C. Even you guys could share the link that you have used to join here in your group, because I want to believe that there are students who are going to miss today. They should be able to join online from wherever they are. And these students have done a great job, the online. Now I can see we are 27. 27. The ninja who has been able to share that link, I need to reward them. But before I do that, have you gotten the question paper? Online from your phone, right? It is not there. It is there. Of first time. Is it possible for someone to give him a link of how you can get those past papers? So as you guys get these past papers, I can read slowly. I can read very slowly. If I were you, I would add him to the WhatsApp group, and then we take a photo of that question, send it there. So we are told Ufanisi Enterprises outsources one of its raw materials, branded Okla, externally. The annual sales demand for material Okla is 30,000. They've given us D. So D equals who? Somebody here? D equals annual demand. Remember, annual demand is D. So D equals 30,000. The company is planning to switch its purchasing system to a JIT, what we call just in time purchasing system to improve efficiency. So what is just in time? Is there somebody who can first of all describe to us what do you mean? What do we mean by this concept of just in time as pertains to raw materials? As pertains to raw materials, just in time system does not believe in warehousing. We shall not have a material storage. We simply procure raw materials for immediate usage, just in time. It's a very, very big system that I would want you to go and study regarding the just in time for Toyota Japan. The Toyota Japan has adopted zero inventory for their raw materials, zero inventory for their work in progress, and zero inventory for their finished goods. They operate, in this case here, what we call a pull demand system. They can't start, in this case here, producing unless they get an order. So it's an order-driven system. So when they produce like this, they know that these 500 vehicles belong to Kenya market, this one. So they don't produce for storage. It's called a just-in-time system, where in this case here we procure raw materials, for instance, for immediate usage. Big hotels, yeah, like the 7-star hotels, they apply this just in time. So if it is sukuma wiki, they procure sukuma wiki, fish, everything for immediate cooking. Yeah, they don't bring them for refrigeration first, and then they put there in those refrigerators for 10 years, and then they start selling them to us. Yeah, just in time is a really good model, which in this case here is in alignment with what we call Kaizen. Yeah, Kaizen systems. So we are told there, the following information is provided. We have purchase cost per unit. Current system is 400. Proposed system is what here? 400. Yeah. You guys, do you have a WhatsApp group? How I wish everybody had a question, because I can see that great lady that doesn't have the question. We must have the question. If you have a WhatsApp group, please share. I wish I had a phone here. I would have done something. Yeah, everybody, or you can even share with the brother if the phone has a problem with charging. Yeah, so we have ordering cost per order. It's given there. In inventory holding cost, I can see under current system is 12%, and then proposed system has a dash. Why does this proposed system, why does it have a dash under holding cost? Because the proposed system is just in time. There is nothing like holding store. We shall not be holding any stocks in our stores. So there is nothing like storage. Yeah, so we have here additional information. Inventory holding cost per annum is given as a percentage of purchases, cost per unit. Under the proposed JIT system, the company does not hold any inventory whatsoever. The reorder quantity under the proposed JIT system is 4,000 units per order. Advise the management of Fanisi Enterprises on whether or not to switch to the proposed system. So we start with the current system. Current system. So this current system, the first thing that I would want to know, how many units are they ordering at a time? How many units are they ordering? Are they ordering at a time? This is really important for us. You see, for example, like for the proposed system, if you read note number 3, proposed system, they have told us that every time they order, they place an order over how many units at a time? 4,000. 4,000. That is proposed system. That's what they've told us for the proposed system. How about, ladies and gentlemen, the current system? The current system, the reorder quantity has not been given. When the reorder quantity is not given, you always compute EOQ. So in this case here, this is not given, and therefore we shall compute EOQ. Not given, you can just have brief notes. Not given, and therefore we shall compute, and therefore we shall compute EOQ. We shall compute EOQ. Under this current system, there is nowhere they have told us that, for example, every time they are ordering 2,000, 3,000, nowhere. So, of course, in the absence of a quantity being given, we are prudent, would always want to minimize our cost, and therefore we shall order the EOQ. So then let's compute this EOQ, all of us. Let's compute this EOQ, all of us. So the good thing with yourselves is that you guys are young enough. The formulas here will not be able to disturb you. So you know that EOQ will be equal to the square root of 2 DCO over HC, isn't it? Yeah, so I don't have a problem with CO. CO is cost per order. If you're writing, if this is your very first class, CO stands for cost per order. For the current system, has this been given? What is the cost of ordering? 960 times. It is 80,000. There is nothing we are multiplying, isn't it? We are told ordering cost per order. The online students today, you guys are not speaking to me. And I wonder, if you're not speaking to your father, then who are you talking to? You must always speak with your dad, isn't it? Always, always. We must be proactive. We must be proactive. And today, remind Mwalimu to give you the very best reading methodology, which will ensure that you will be able to pass this paper one term. We don't want, in this case here, to repeat these things one term. So I'll be able to give you a very good reading system. So CO is 80,000. Annual demand, already we have gotten that as 30,000, isn't it? Yeah, so I can write it. Annual demand is 30,000. Do we have cost per order? This is given already. You have given it to me. How about holding cost? Holding cost per unit per annum. Has this been given to us? Thank you, Eric. At least Eric is following. For the current system, have they given me the holding cost? What is given there? Or do we say when in the event of the holding cost being given as a percentage? We multiply it with what year? The purchase price. That is what we agreed. Thank you so much. So the holding cost is given as 12%. It can never be left like that. Holding cost is in Kenya shillings. So if it is given in form of a percentage, always multiply it with the purchase price. Always multiply it with the purchase price. So it will be 12% times, have they given us the purchase price in this question? Have they given us the purchase price in this question? It is 400. It is 400. Thank you so much. It is 400. 400. So 12% times 400. So remember, 12% is the same as 0.12, which will end up giving us a what figure? 0.12. So Galaxy, Irene Onyango, great. So they're giving me 40 what here, somebody? 48. And therefore, I can now very, very comfortably give my examiner the EOQ, which will be the square root of 2 times annual demand of 30,000 times cost per order, which is 80,000. Divide this by the holding cost of what here, somebody? 48. So remember, how do we do this first? We forget the square root, eh? And they say 2 times 30,000 times 80,000. Whatever answer we get, we divide by 48. And then now we say square root. And then we say square root. Yes. This answer they are telling me, Mwalimu, this is wrong. This is supposed to be 12% of what is the purchase price? Is it 4,000 or 400? Yeah, look at the question, eh? Purchase cost per unit. It is? It's 400, eh? Thank you, yeah. Thank you. So then the EOQ at the end of the day, so I'm correct. So the EOQ at the end of the day, how many units are we getting? 10,000, isn't it? So these guys currently, they are procuring 10,000 units every time they make an order. But have we answered the examiner really? We haven't answered the examiner. For the many years that I've marked these papers, students will end up giving us incomplete workings. And then, of course, after every exam, they'll always call me because most of them, by the time we finish the semester, all of you will be my friends. Eh? Yeah, bigger friends. They'll always call me and then they tell me, Chief Ninja, you taught us very well, we'll pass. So they do like this. When results are out, when they send that message at 2558, yeah, when the message comes back, opposite, right? And then in this case here, they tell us, Kasneb is bad. Kasneb is looking for money. No, you are giving incomplete answers. Always go back to the question and read again. They want us to advise the management of Ufanisi Enterprises on whether or not to switch to the proposed system. So I can only be able to do that advisory on the basis of total cost. So I must do costing. So and then I'll be able to decide between the current and this proposed, which one is cheaper? Because you are on this earth, in this case, you have to minimize expenses, not unless you're another one, isn't it? Would want to minimize always expenses. So I want to evaluate the total cost of this and the material costing. So come and give me this current. So then what is the total cost of this? So is there somebody who remembers the formula of getting total cost? To get total cost, ladies and gentlemen, to get total cost, I gave you a formula. And actually, if you remember very well, we were able to premise this on Mwai Kibaki's political party. You guys are young, you can't even be remembering the late Mwai Kibaki. Do you? This guy belonged to which political party? DP. So you take dP, yeah, plus D over Q, CO, Q over 2, HC, isn't it? Yeah, total cost. So total cost equals annual demand times price per unit, plus annual demand divided by the Q guys have gotten, times the core cost per order, plus that EOQ you have gotten divided by 2 times HC. So then in this particular case, what is the annual demand? Thank you so much, Galaxy. But in this case here, whenever you are evaluating total cost of many quantities, you are always better off. You see, here you don't have EOQ only. If it was EOQ only, then at the end of the day, this would have become the very best way is for you to just write that in full, always. So let's go slowly here. Do we know the annual demand in this question? Yes, it is 30,000. The price per unit is what this sister was trying to tell me, it's 4,000. But she was able to realize very fast that it is 400. Yeah, plus the annual demand. The annual demand again is 30,000. Do we know the quantity now, the Q? Q is how many units? Q is 10,000. So Q is 10,000 multiplied by cost per order. The cost per order is how much here, somebody? It is 80,000. Cost per order is 80,000 plus, in this case here, again, Q over 2. The same quantity, which is the EOQ we are ordering. So the Q, ladies and gentlemen, here is 10,000. 10,000 divided by 2 times, in this case here, the holding cost, which is what here, which is 48. My camera can't see up to there. I have to do some twisting, but we shall overcome. We shall overcome. We shall always overcome. Things are okay. Yeah, now it's very, very good. So somebody in this case, you're using now your calculator, not your phone. I believe you guys have calculators, right? Yeah, thank you so much. So you say 30,000 times 400 plus 30,000 divided by 10,000 times 80,000 plus 10,000 divided by 2 times 48. So who will be the very first person to bell the cat to give me the answer here? So according to Irene Onyango, she's getting 12 for 80,000. 12 for 80,000. She's getting 12 for 80,000. So the physical students, are you able to get the same? Proper. And then now let's go ahead and look at the proposed system. So right there, proposed system. Which system are they proposing? I'm alone. They're proposing the JIT, isn't it? JIT or JIT. What does this JIT stand for in full? Just in time. Just in time. It stands for just in time. All right. So just in time, do we have the Q? For just in time, do we have the Q that we are procuring every now and then? Oh, yes, we do. Ya karibu sana. Kuna kiti hapa ma atafutiwe huko nje. Waambie kwanza wakuletea kiti ndani. Ushamwambia, great then. Kwanza kiti hapa. All right. All right. All right. So do we have Q? There is a student called Mushai Masiator. Yeah, they are telling me it's 4,000, isn't it? So here then I cannot calculate EOQ because already the quantity to be procured under the just-in-time system has been given. Here straight away, I will go to the costing bit of it. Costing bit of it. And the costing will really be easy. I will be able to come and say total cost. I can remind the examiner severally. Total cost will be DP, D over Q, CO, plus Q over 2, HC. So in this question, do we have annual demand? Remember, annual demand is always known in advance and remains constant. So the 30,000 will not change because you have changed the system. 30,000 remains. So then this will be 30,000. 30,000. What is in this case is the procuring price. If you look at the purchasing price, still under the proposed system, it's how much? It's 400, not 4,000, right? Yeah, you must be rich. I'll talk to you after the class, isn't it? Because you are seeing thousands. Where we are seeing hundreds, you're seeing thousands. So plus our annual demand is still 30,000, right? So Q, it is 4,000. What is cost per order? They are forgotten. Cost per order is what here? 80,000? I'm alone. The cost per order is 80,000. No, it's different, isn't it? 28,000. It's different. It's different. It's given under the new policy, isn't it? It's given under the new policy. Somebody was also getting confused like myself. They're saying it is 80 and yet in the new policy it's given us 28,000. Thank you so much for saying that. Great. And then Q over 2, so 4,000 over 2 times the holding cost. So what is the holding cost here? Oh, is there something I'm not able to see? Or you want to charge? Yeah, come close to me here. Great. But you have to be careful how you carry your seat off. Okay, right. Right. All right. Then I'll have to go and get a chair for this lady. You can see she's suffering. So holding cost is 48, right? Holding cost is 48. The online students, are you able to see in this case here that the holding cost is 48? A lie. If it is just in time, we shall never hold a penny stock. If it is just in time, the holding cost shall always be 0. If you look at that column there under proposed system, what are they giving us about holding cost? 0. 0. 0. So there is somebody who is getting a different figure there. I'm late. Which question is this, Ninja? So I'll not answer you because you're calling me Ninja. I'm called the CPA Chief Ninja. So we are doing, I like joking a lot, April 2024, question number 3. April 2024, question number 3. Where do I go wrong? I'm getting 1262. Yeah. So Tina, you see, it's all about body mass. If you simply go slowly, say 30,000 times 400 plus 30,000 divided by 10,000. Check whether you have here times 80,000. Don't say equals anywhere. You continue with plus 10,000 over 2 times 48. Ensure where there is a times you're using a times, not a plus, like that, and then you say equals. Tina, it will be able to give you that 12 something. It'll be able to give you that 12 something. So how much are we able to get, ladies and gentlemen? Now it is 12. Well, my online students are not talking to me at all today as they 12 to 10. So you're getting 12, 210,000. So now between the two expenses, which model will you recommend on the objective of cost minimization? Do we recommend the proposed or do we stay with the current? The proposed is cheaper. So you own up the question, you own up the assignment, you're the consultant, you say, I recommend the proposed system. I recommend the proposed system. I recommend the proposed system. Then that way you become what here? An advisor. You've advised. So as a quick way of a recap, again, before I start working on today's job, I would want us, ladies and gentlemen, to look at another question. I don't trust you. When I look at your faces, it's like you've not been reading MA. Of course, you are very, very good, but you haven't been reading MA. You have been reading all the other subjects, but not MA. Am I correct? Mwalimu, you are wrong. Let me see. Let me see. Students are reading very, very bad papers, and then they forget to read. Yeah, I'm getting you a chair. Don't worry. I'm getting you something. I'm just writing this. I get you something. So we are looking at now December 2024, question number 3B. December 2024, question number 3. Great. Yeah, even that table is very big. Yeah. December 2024, question number 3. Boy. Online wamejiletea wamesema wamekuwa kisoma MA. Wacha tuone. Online wamejiletea sana. Wamekuwa kisema kwamba hawa wanasoma management wote ya. Wacha tuone. So December 2024, question number December 2024, question number 3B. So I'll give you exactly 2 minutes to look for that question and then screenshot it and share in the group. And once you get it, unasema kidole. Unasema yes. So December 2024, question number 3, boy. December 2024, question number 3, boy. Tell me whether we have gotten this right. tell me whether we have gotten this right. December 2024, question number 3, boy. Have you gotten the question? All right. All right. Sijui kama mwanafunzi mgeni amepata huyu Gen Z, kijana yangu huyu amepata kweli, huyu mgeni, msaidieni apate. Mpe link. Ama mwekea hapo, yes. Na hapa tuko na wifi. Yeah, great. So this question, when they brought it, it really gave our students here a hell of time. Not many students were able to get this right, this question. And yet it is really easy, very easy. So we are told here Savannah supermarket currently orders 1,000 units of stock, items ZO at a time. So Q is 1,000. So in this question, I'll not compute E or Q because already quantity being procured has been given. The management of Savannah, the supermarket has decided that it may be better to use E or Q method to establish an optimal reorder quantity. Information regarding stocks is given below. Annual demand is how many units? 12,000. Purchase price is 15 per unit. Fixed cost per order is 200. The cost of holding an item ZO in stock for a year is made up of the following percentages. I can see obsolescence 3, perpetual audit 1.5, opportunity cost 2, insurance 1, storage 0.5. Can somebody in this case here add up all those costs for me? Somebody who can add up all those percentages for me? 3% plus 1.5% plus 2% plus 1% plus 0.5%. What are we able to get there, my good students? 8%. Thank you so much. They're saying it is 8%. 8%. So then we can even go ahead and give this examiner the HC. Let's just go ahead and give this examiner. Thank you so much, the online ninjas. I can also see, just like these guys who are with me here physically at the Commonwealth House, you guys are also fighting a lot. So they're telling me that holding cost is 12%. And whenever it is given, no, 8. It's 8%, isn't it? And whenever it is given in form of a percentage, I will always multiply this with what here? Purchase price. So it will be 8% of the purchase price. And what is the purchase price? The purchase price is 15, isn't it? It is given in the question. 8% of 15. It's given in the question. It's given in the question. My internet is unstable once in a while. Inatupa nje, hopefully. Yeah, we are recording. Yeah, thanks for that concern. And I'm really sorry. Ensure that you switch on or you switch to Safaricom, the better option. In terms of internet, Safaricom is the best. They should pay me for endorsing them. Yeah, and of course, the online students, when you realize I'm not able to give you an answer to a question, please note that I haven't seen it. You should always keep on repeating it until I see your questions. I always answer all questions shot at me, all of them. Hakuna swali ya ujinga. So wanasema ati inakuja ngapi? 1.2. Thank you so much. Great. So the current annual total costs are 183,000, being the total of the purchasing costs, ordering costs, and holding cost of stock items ZO. Using appropriate calculations, show how annual demand of stock items ZO amounts to 12,000 units. So they want us to calculate D. If you got this kind of a question in an exam, how would have you really tackled it the ninja way? See, like here, most students in this sitting, they started calculating EOQ. And yet EOQ question requirement is in part 2, where they want us to calculate the economic or the quantity. Yeah. What would have you done in an exam if you got that kind of a question? We substitute in which equation? I like that. Thank you so much. I'll give you money today, right? Thank you so much. So what this lady has known is that the total cost has been given. This lady must be a genius. The total cost has been given, and she knows the formula that to get total cost here, we are taking the purchasing cost plus, in this case here, the ordering cost, D over Q, CO, plus the holding cost. And then the total cost has been given. Total cost has been given as what here, somebody? William alone. Total cost has been given as 183,000, isn't it? Yeah, in the last paragraph. Total cost has been given as 183,000. Has the annual demand been given? Even if it is given, we assume it's not there because they want us to prove that 12,000 is correct. So the annual D, we don't know it. But fortunately, we know. Do we know the price? The purchase price is 15%. Uongo. Wewe. Per unit, yes. Per unit, I love that. Plus annual D, this is not given, but Q is given. Every time in this case here we are procuring, we are bringing home how many units? What is the Q given in this question? What is the reorder quantity? The online ninjas, they're not writing. Is it 12,000? The online ninjas, no. Galaxy, no. No. Remember, there is a difference between annual demand and EOQ or Q. Q is 1,000. Thank you very much. 1,000. Have they given us the cost per order? In this question, have they given us the cost per order? Every time we are ordering, how much do we incur? It's given there. It's called the fixed cost per order, which is 200. 200. Plus the Q, which is 1,000 over 2 times the holding cost that you guys gave me a figure of what here? 1.2. So then this one, if I try fixing it down, it will be 183,000 equals 15D plus, this is 0.2, right? I am alone, but I will overcome. You see, 200 over 1,000 is 0.2. So it will be 0.2 dog. Yeah. Plus, could you kindly go ahead and do these multiplications and give me the final answer there? 1,000 divided by 2 times, in this case here, 1.2. What are we going to get at the end of the day? Tina gives me 600 bob. Is that okay? Tina gives me 600 bob. So from there, what do? We shall put like terms together. So these 600 loves this. They are constants. So you put, in this case here, those terms that love each other together. So then when it crosses the sign, equal sign, we expect it to be a negative, isn't it? Yeah. Then this will be 15.2 dog. So can somebody do these subtractions for me? 3,000. Is it 3,000 or 300? Where? 183,000, yes. Minus 600, that will be 182,400. 182,400 equals 15.2 dog. Therefore, dog will be 182,400 divided by 15.2, which will end up giving me what figure? 12,000? Yeah, 12,000. So in this case here, this is agreeing, right? Because the question was that we prove using appropriate calculations, show how annual demand of stock items, the dough, amounts 12,000. So then here now we are very happy in an exam. We can even draw a smiling emoji. Yeah, we're very happy because we are correct. We are very correct. So in an exam, do you think you would have gotten this correctly? Yeah, right? So then we go straight away to number 2. So number 2, they want us to calculate the EOQ. Yes. Sorry. Number 2, they want us to calculate the EOQ. Number 2, they want us to calculate the EOQ. EOQ. I'll give you a minute. You guys should be able to copy and reach where Mwalimu has reached. So the problem with online students, you haven't invited yet your colleagues. You haven't invited yet your colleagues. You have not invited yet your colleagues. All right, ladies and gentlemen, now what do we have there? Gotten it? Yeah, 2 million. Total cost or EOQ. It can't be more than the annual demand one. Eh? It can't be more than the annual demand. Angalia, maybe square root, hujafanya square root. Haujafanya square root. 2,000, right? Is there anybody else who is able to get that 2,000? Yeah, I can see my online ninjas are also putting in very tough hard kicks. They're getting that EOQ of 2,000. So does it mean that everybody has been able to get the 2,000? I stopped doing the question? Or do I just do it for the sake? Yeah, for the sake of having complete notes. Maybe I need to do it. So 2, so EOQ, this will be the square root of 2 DCO over HC, square root of 2. Annual demand, you gave me a figure of 12,000, isn't it? How about cost per order? 200, eh? And the holding cost, indeed, you guys gave me the holding cost, which was 1.2, isn't it? Then, of course, we forget, first of all, the square root. We shall be able to say 2 times 12,000 times 200. Whatever we get, we divide by 1.2. And then at the end of the day, we take the square root, which will end up giving us what figure? 4 million. And then now the square root will end up giving us 2,000. 2,000. Great. So far, we are all smiles. Yeah, great. Thank you. 2,000. 2,000. And then Roman 3, using your answers in B2 above, calculate the revised annual total inventory cost of stock items ZO. So they want us to give them the TC for the EOQ now, isn't it? Because already for the old policy, we had 183,000. Now we need in this case here to get TC for the new EOQ model. And then now we compare which one is better. Yeah, we are in this world as management accountants to minimize cost, to minimize cost, to minimize cost, to minimize cost. We are on this world to minimize cost. So go ahead and give us the total cost. So you say Roman 3, total cost for EOQ, total cost for EOQ. So this TC will be equal to DP plus D over QCO plus Q over 2 HC. So the annual demand, I hope they still remember the annual demand, 12,000, right? The annual demand is 12,000. The price per unit, you guys had given me a figure. Price per unit was how much? 15 per unit, right? 15 per unit plus, in this case here, the D over Q. So 12,000 divided by the Q, you guys got 2,000, isn't it? Times core. Core is 200 plus this Q, the EOQ. The holding cost, if I remember very well, you guys had given me a figure of what here? 1.2, isn't it? 1.2. So then at the end of the day, we shall end up getting something. This man has a very powerful calculator. I've never seen this kind of a calculator. Let me have a look. This is a very good calculator. Never ever. Wow, great. Should give it to me as a gift and then I give you something. We shall overcome, right? We shall overcome. That's a really good calculator. And I like fine things on earth. Even if I'm telling you that management accountants will minimize cost, I don't minimize cost myself. So they're getting 182, 400. Yeah, for 182, 400. So then what would you recommend? What would you recommend? This time around, in this case here, I'm recommending EOQ. EOQ is cheaper now, isn't it? Huh? The other one was 183. This is 182, 400, isn't it? So I recommend the EOQ model. I recommend the EOQ model. It is cheaper. I recommend the EOQ model. It is cheaper. And in some cases, they'll ask you for savings, When they ask you for savings, savings in this case here is equal to, savings is also known as cost gap, the cost gap. You take the expensive cost minus, in this case here, this lower cost. So this, I will end up saving how much? The saving ngapi? 600, Bob, right? Is this 600 or something? It's like you guys are lost. It's like you guys are lost. Because remember the old model, the total cost was 183,000. The new model, the total cost is 182,400, isn't it? So the difference gives us what here? 600. Thank you very much. Is an cost to save. 600 like that. So have you been able, ladies and gentlemen, to follow the solution? Now, right there, today's date. This was a recap, isn't it? This was a recap. Now we are looking at today's concept. Today's concept. The online students, are you happy? Are you able to follow, or do you have issues with internet? The online students, they are happy. Great. That is my happiness now. The online ninjas are happy. The online ninjas are happy. Of course, the physical guys here, I don't have to ask them because I can see it on their faces. They're happy. Great. Then, ladies and gentlemen, I want us to, they're following. Thank you so much. So I want us to straight away go to EOQ. EOQ with multiple discounts. EOQ with multiple range discounts. Multiple range discounts. Very, very important before we look at something different. EOQ stands for economic order quantity with multiple range discounts. They brought this in 2025, April, and it really disturbed our students. Those students who are not very, very serious. Otherwise, if you are serious, this is a very simple thing. Now, you see, we'll go to a question. You'll get a question where you are told that if you procure 1 maybe to 99 units, you get a discount. You get a discount of, say, 10%. If you do 100 to 199, you get a discount of 15%. And these classes are many. So then in that case here, you are dealing with a question of EOQ with multiple range. These are the ranges. Range discounts. I know in the previous class, I did one question for you where we were being given, like, if you procure 15 units, you get 10%. If you procure 20 units or 200 units, you get this percentage. You see, that is right, but it's not coming in the form of a range. It's not coming in the form of a range. Ladies and gentlemen, what you're supposed to know here, and we shall start by writing a note, that for each price bracket, for each price bracket into bracket range, calculate EOQ, calculate economic order quantity. Full stop there. Now, dash one. If EOQ calculated, EOQ calculated is within the range, is within the range, it is feasible. I.e., calculate total cost of the EOQ computed. If EOQ calculated is within the range, it is feasible. Feasible means good, practical. Calculate total cost of the EOQ computed. Calculate the total cost of the EOQ computed. That is number one. Number two. If EOQ calculated is less than the minimum range value, comma, yeah, use the lowest quantity, use lowest quantity in that range, full stop there. If EOQ calculated is less than. So for example, please listen and listen to me very well. If you come to this particular class, you calculate EOQ, and get an EOQ of 90 for this class, then we shall compute the total cost of the minimum in this range. The minimum here is 100. So if the EOQ computed falls below the minimum value of this range, like 90 now is lower than this, then we shall use the lowest quantity, which is this one, on that very range. The last one, the third tick. If EOQ computed is bigger than the maximum, range value is bigger than the maximum range value, comma, ignore it. So if EOQ computed is bigger than, the bracket is bigger than, if EOQ computed is bigger than the maximum range value, what shall we always do? You ignore. So if you're using this range again, you are computing EOQ, get 240. Where is 240 in this class? 240 in this class is it's outside. It's bigger than this. 240 is bigger than this. So if it's too big for the shoe, you ignore that one. Is a big problem. Now, ladies and gentlemen, after that, mention there, compute total costs. Yeah, you're saying like a dash. Compute total costs across the ranges. Compute total cost across the ranges and choose the lowest. Compute total cost across the ranges and choose the lowest, Are we okay up to there? I can see in this case here, my online ninjas are talking. They're telling me, Mwalimu, we are following very well. Thank you. Thank you very much. Great. So then we go to our past papers. In our past papers, we look at April 2025, question number 4A. 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 And once you get it, ladies and gentlemen, please put your thumbs up like this. April 2025, question number 4A. April 2025. April 2025, question number 4A. April 2025, question number 4A. Question number 4A. All right, ladies and gentlemen, there we are. Once you get the question, are you able to mention there why for yes? Do we have this? Do we have this? They are saying yes. They are saying yes. They are saying yes, we have it. Great. Saying yes, we have it. They're saying, Mwalimu, yes, we have it. All right. Thank you. All right. Thank you. All right, ladies and gentlemen. So we are told Yusufu Enterprises uses EOQ to establish the optimal reorder quantity for purchasing the main raw material used in the production process. The farm has been approached by an alternative supplier who is willing to offer the following discounts. You can see order level 0 to 199, 200 to 499, 500 to 699, 700 units or what here? More. Information regarding the current inventory cost is as follows. Holding cost per unit per year is approximated to be 10% of the purchase price. The order cost is 2. Annual demand is 15,000. Purchase price is 15. Current EOQs are how many units? 200 units. So determine the order quantity that would yield the lowest total cost. This is a very easy question. How will I be able to handle it, ladies and gentlemen? So the first thing that I will do, I will write my ranges. So I can see my ranges there. The first one is 10 to 199. Yeah. I can see 200 to 499. I can see 500 to 699. I can see 700 and above. Yeah. So we have here the discounts. Yeah. So instead of writing that discount, we are bright people. We can just go ahead and write the purchase price. Bright people, purchase price. So purchase price, the first one that I'm seeing there is that if we procure between 0 and 199, we shall get a 1% reduction in price because 1% is the discount. So then in that case here, we shall be procuring these goods at what percentage here, somebody? 99. So 99%, are you able to see the original purchase price? The very original purchase price, I see it there as 15. Isn't it? So 99 times 15. Now, can we kindly continue? How about this other class? So this other class, I can see, ladies and gentlemen, the discount is 3%. So 3%, it means we procure it at what percentage? Thank you. 97 at 15. The other one, I can see 5%, meaning that I procure this at 95%. The other one, ladies and gentlemen, I can see in this case here 7%. 7% means that I procure this at 93%. 93%. That is a very good step that a very good student should have gone through to be able to get some few free marks. So in terms of 2 decimal places, are you able to give me these figures? Actually, many decimal places. The more the decimal places, the better. The more the decimal places, the better. The first one, according to my great brother here with a very beautiful calculator, is getting 14.85. Thank you so much. So I'll be waiting to get all the other values from you ninjas. 13.55. 14.55. Thank you. Thank you so much. 14.25. Thank you so much. And then the last one, it'll be 0.93. Yeah, somebody's giving me the last figure, 13.95. Now, could you be kind enough and tell me, after getting this purchase price, what do you think will be the next component to be calculated? EOQ wangu. Lakini sana kwa kujaribu. You see, holding cost is a percentage of the price. So first of all, I'll give my examiner the holding cost. Are you able to see the percentage of holding cost? Holding cost percentage is what here? Is 10%. So 10% of the price. 10% of the price. So we start from here. So this will be 10% of 14.85. 10% of 14.55. We have here 10% of 14.25. We have 10% of 13.95, like that. So this one, I don't need anybody's calculator because I'm able to tell that this will be 1.485. This will be 1.455. This will be 1.425. This will be 1.39, like that. So now we have our holding costs. It is after getting these holding costs that we should beautifully come and get EOQ now. Your EOQ now comes here. And fortunately, we know the formula, isn't it? Yeah, we know the formula. We know that EOQ equals a square root of 2 DCO over HC. So for each class, actually, in this one, I would prefer you write your formula like this so that we minimize on space. for us to minimize on space, write like this, divided by HC. So like now here I will say square root of 2 times. Have they given me the annual demand? What is the annual demand, somebody? Online students, are they able to see the annual demand? Online students, are they able to? Thank you so much. 15,000. Cost per order does not fluctuate. Cost per order is given. Cost per order, if you look around very well, the cost per order is given as what here, somebody? It's 2 per order, isn't it? The online students are not answering me, but we shall overcome. The online students, what is cost per order? It is 2. Thank you so much. So like now for the first range, I'm getting the holding cost as 1.485. So I would want you to give me the final answer. You say 2 times 15,000 times 2 divided by 1.485. You give me the answer. You give me the answer, and then we shall be able to take a short break. Yeah. So according to Mercy Yator, she's getting 201 units. Mercy Yator is getting 201 units. After getting the square, right? The physical ninjas around here can't get anybody giving me an answer. 201, isn't it? Thank you so much. So we'll take a 5 minutes break. During those 5 minutes, nobody is writing anything. All of us in this case here should be happily talking to our neighbors or doing something at home, isn't it? 5 minutes, we shall come back at exactly 7:11. 7:11. Thank you so much. All right. Then we come to the second one. So the second one, we have here square root 2 times annual demand. Cost per order is like that. Yeah. And then, of course, we have the cost of holding as 1.455. So square root, what number are we able to get? 203. 203. Tumepotea, eh? Iko sawa. Iko sawa, eh? Iko sawa. So tuendelee mbele. So hapa unakuja unasema square root of. Ya, wanafunzi wa online msisikie vibaya. Si nyinyi nitawatumia M-Pesa. Wanafunzi wa online sitawatumia M-Pesa. Eh? M-Pesa na nyinyi mnataka M-Pesa. So 2 times 15,000 times 2 divided by 1.425, which will end up giving us a what figure? 205, eh? So this is 205. Aha, great. The last one, square root of 2 times 15,000 times 2 divided by 1.395. So what figure are we able to get here? 207. Great. Then get ahead and give us the very last column for this table 1. Give us what we call the relevant EOQ. Relevant EOQ. For each class. So for each class, give us the relevant EOQ. So now compare your values, calculated EOQs, with your classes. We start with the first class. So first class, I'm getting 201. Compared with the range, where is it? Within, eh? Are you sure? It's above, isn't it? And if it's above, what do we do? Ignore. Online ninjas do kama ameshika hata ameniandikia pale ignore. So this is above. Actually, you can even write there above. Actually, that's what we should have done. For revision, yeah, 201 is above. So ignore. And then we come to 203. 203 for this one, where is it? Within. And therefore, EOQ will be what here, somebody? Yeah. If it's within, it becomes feasible. It is within. So it becomes practical. It is within, it becomes practical. It is within, it becomes practical. Is that okay? Now from there, we go straight away to the next one. The next one is 205. 205 in this case here, where is it? It is below. So when it is below, what have we been able to mention somewhere? We evaluate which one? The very lowest in that range. The very lowest in that range. So that case here, our optimal EOQ becomes what here, somebody? 500. Thank you very much. 500. The last one, I'm 100% sure they'll not be able to get. I'm 100. We can even bet. Do you want us to bet? 207, where is it here? It's in above, right? No. 207 is below, isn't it? So it is below. And therefore, we evaluate which EOQ? The lowest, 700. The moment you understand this, you have understood the entire concept. Choose 700. I wish you guys accepted to bet with me. You'd have gotten some great money. All right. Then after that, we go to the costing bit. We go to the costing bit. So this is table 1. We can call this table 1. Yeah, and then now we come and do table 2. Table 2. So we shall copy the ranges. So ranges 0 to 199, 200 to 499, 500 to 699, 700 and above. So remember, this table 2 is just purely for costing. It's purely for getting total cost. And our total cost is DP plus D over Q, D divided by Q, CO, yeah, plus Q divided by 2 H. I'm just writing like that for purpose of saving space, For purpose of saving space. So we start with the first range. Adjust the camera, yeah. We start with the first range. 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 Let's start with the first range. Thanks, Joan, for raising that with me. So we are simply following this. Like, do we know what the annual demand is from the question? Do we know what the annual demand is? Oi, niko peke yangu lakini I will overcome. So the annual demand in this question, walisema ni ngapi somebody? 15,000, isn't it? So we have here 15,000. Yeah. In this particular range 1, what is our price? In range 1, the price per unit is 14 point. Oi. Range 1 is supposed to be 14.8. The price is here. Is that okay? Yeah. Plus in this case here, D over Q. So plus annual demand, 15,000. What is the Q that we have recommended? So range 1, we ignore, isn't it? Yeah, we said we ignore. So come and rub this and right there, big ignore. Ignore. Because class 1, we don't have a quantity. We have said ignore. It's infinite. Ignore. So have you struck yours off like this, or are you trying to look for a rubber? It's just professional to do it that way. Yeah, just ignore. So we go to range number 2. Range number 2, we shall take the annual demand of 15,000. How about the price? The price for range 2 is 14.55, isn't it? Yeah, plus this annual demand divided by the second quantity there. Within the relevant EOQ, you have said the EOQ is 203, isn't it? The EOQ is 203. Yeah, times cost per order. What is the cost per order? Cost per order. Cost per order, it is 2, Niko peke yangu, but I will overcome very soon. Plus Q over 2. Q is 203. divide this by 2 times HC for the second class, remember, it's 1.0 what here, somebody? 455. So go slowly. Don't put brackets anywhere. Don't put brackets anywhere. Just calculate it slowly. Give me the total cost figure. Just move slowly there. Move slowly there. Move slowly there. Tunakusaidia hii. So Tina gives me 218. I'm waiting for the physical students to as well give me this figure. 218. Na getting ngapi? Nangoja physical ninjas wanaambia answer ya hii total cost for the second class. $218, $580. Point. Ama hivyo imeisha. Tuache hivyo Aya, tuache hivyo. Thank you so much. So we go to the next class. So the next class, 15,000 times the third class price is 14.25 plus, in this case here, the annual demand divided by, I know the third quantity. The third quantity here is how many units? The third quantity, it's 500. Third quantity is 500 times, in this case here, the CO, which is 2, plus 500 divided by 2. And I know for the third class that the holding cost per unit is this one here, 1.425, like that, which will end up giving me what figure? Don't put brackets anywhere. You are simply doing it general evaluation to get total cost. To get total cost. Masia Tora has given me 214. Is she the only one getting 214? Quite a small number. Physical hawajanipatia. Physical wanipatia figure. Sitawaletea sweet. Hawa wanafunzi wako online. If you remember very well, last semester niliwapeleka Sarova Stanley wanafunzi wengi sana, si ni kweli? Yeah, because mlikuwa very hard working, kapeleka Sarova Stanley. So the guys who are with me here physically, if you are very hard working, yeah, nishapeleka wanafunzi mpaka Masai Mara, fully sponsored. Yeah, if you are very, very hard working. 214, 166. Yeah, thank you so much. Now from there, we go to the fourth one, which is the last one. I'm happy because the last one, so the demand remains the same, times the price per unit, which is 13.95, plus 15,000. We divide this by EOQ for the fourth one. What is the EOQ for the fourth one? 700. 700 times the cost per order, which is 2, plus, in this case here, quantity over 2. So 700 divided by 2. Yeah, divided by 2 times, in this case here, 1.395. So is there somebody who is able to give me this answer? Anybody who is able to give me this answer? 209. 209, 209. Yeah. 781. Point. Exactly. No decimals. So then amongst the quantities that you guys have been able to evaluate their total cost, which one is the least cost quantity? What are you recommending in this case here, these guys to buy? Remember, you have those relevant EOQs. So the one that has got, this is the least cost, isn't it? This is the least cost. And therefore the company should buy how many units here? The fourth quantity here, the fourth EOQ, 700, yes. The company should procure 700 units at a time. So is that okay? The company should procure 700 units at a time. So as we finish with these materials, I would want you to go ahead there and give me a title, stock valuation. I know this one you'll be able to practice, eh? So give me a title there called stock valuation. And then we go to labor, and then we go to overheads, we finish. So stock valuation. Now, ladies and gentlemen, remember now here, you are the stores manager. And as a stores manager, you're going to be receiving quantities at different prices. Because, price cannot be constant year in, year out. Prices will keep on fluctuating. So there are stock items you'll receive, like, for example, last week, you received 100 units. Yeah. And then you are receiving each one of them at what price, for example? 70. This week, you bring in 200 to your stores at 80. Another week, maybe 300. At 50, perhaps you've gotten a supplier who is in a hurry to sell goods. So he sells to you goods at a deep discount. So then you're bringing these goods to the stores. Now, when you are issuing these goods from the store to go for production, will you be able to know that this quantity I'm issuing, I got it from this batch of 70? I got this only from this batch of, no. Once you bring these batches, all of them are normally mixed. And that is why when we are issuing them outside, we shall be making assumptions. And the assumptions of issuing stocks for purposes of valuations. So assumption of issuing stocks for valuation purposes, from your exam, for your exam. They include number one, FIFO. Yeah. Number two, we have LIFO. Number three, we have what we call WAM. So we have FIFO, LIFO, and WAM. FIFO, LIFO, and WAM. So we have FIFO, LIFO, and then we have what we are calling WAM. FIFO is fast in, fast out. FIFO is fast in, fast out. Fast in, fast out. LIFO is last in, fast out. LIFO is last in, fast out. And then we have WAM. WAM is weighted average method. Weighted average method. Weighted average method, WAM, like that. WAM. Weighted average method. So FIFO is fast in, fast out. LIFO is last in, fast out. Yeah. And then, of course, now I'm going to, ladies and gentlemen, give you straight away a question. First of all, I will start with a very simple question, which doesn't have any returns to the stores. Very easy question that I will start with. Easy. Ooh. And we shall be able to finish this in the next 10 minutes, and then we go home, eh? And then we go home. We go home. So we start with the FIFO, right there, FIFO, first in, first out. What umeshafanya tayari? Oh, you're okay. FIFO, first in, first out. And then you underline. This method assumes that. This method assumes that materials are issued out of inventory. This method assumes that materials are issued out of inventory in the same order. In the same order in which they were delivered into inventory. I'll repeat. This method assumes that materials are issued out of inventory in the same order in which they were delivered into inventory. i.e., we issue out the oldest inventory first. i.e., we issue out the oldest inventory first. Is that okay? So then we look at an illustration. Let's look at an illustration, my good students. We look at an illustration. So this illustration is JM Limited. We're writing illustration there. JM Limited had the following material transactions. JM Limited had the following material transactions during November. During November, JM Limited had the following material transactions during November. During November. Is that okay? During November. Yeah. So we have here opening balance. Opening balance. 1st November. 1st November. We have quantity and then purchase price. Purchase price. So 1st November, we had 20. And then the purchase price was 4 per unit. Purchase price per unit was 4. All right. So we are through with this. We go to the second item. We received. So receipt. So receipt, ladies and gentlemen. We have 8th November. 8th November. The quantity was 140. And each unit was going for 4.4. Thank you. Then we had issues. Issues. So issues. That was on the 12th of November. 12th November. We issued 80. So whenever you're issuing, the purchase price cannot be given. Whenever you're issuing, the purchase price can never be. And if it's given, it is irrelevant. It is irrelevant. Thank you. We go to the next one. So the next one, ladies and gentlemen, what do we have over here? Receipts. So we have receipts. So receipts, ladies and gentlemen, I can see 18th November. 18th November. So this 18th November, we have how many units here? 100. And because we received, then we are procuring, and I can see the figure is 4.6. The figure is 4.6. The figure here is 4.6. Thank you. All right. Now, after that, ladies and gentlemen, we have issues. So issues, we have 26th November. 26th November. Yeah. And we did issue 140 dash like that. So we are required, we are finished to calculate the closing inventory value, the closing inventory value, the closing inventory value at the end of November, at the end of November, at the end of November, using FIFO, using FIFO method, using FIFO method. So calculate the closing inventory value at the end of November using FIFO method. Easy, easy. I will get all the marks here. Very easy. Very easy. Now, ladies and gentlemen, with your permission, I'll be able to solve this pretty fast, 10 minutes, and then everybody should be able to go to their home comfortably. The guys, of course, in this case here, who are online, who are studying, in this case here, when they are already at home. Yeah, you'll be able to know what is best for you to do immediately after this. So I hope all of us have been able to copy down this information. It will be given to you in an exam. And if that is the case, then we write this solution, stores ledger card. So now I can grab this. So we have there stores ledger card. So now we have stores ledger card. So we have here stores ledger card. And we are using a method called what here? First in, first out. You skip a line, always. You shall skip a line. Once you skip a line, you write here quantity, rate, amount. Quantity, rate, amount. Quantity, rate, amount. Yeah. So you come up here. So you see, at the end of this amount, you shall always have double lines. We shall always have double lines at the end of the amount. We shall always have double lines. Yeah. Yeah. So this one here, the first one here is receipts. Then we shall have issues. Then we shall have balances here. Balances. And then, of course, here we shall have the date. And then here you write November, month of November. Month of November, like that. So please, once you finish writing up yours, mention there yes, Y for yes. So have they finished putting down the table? Yeah, so we start with the first transaction. Always, we shall bring down the balance. Always, we start by bringing down the balance. So you can see the balance, opening balance was on 1st November. So the first date here is 1st of November. So you write here first. Don't write November again because November has been taken care of. So what happened on 1st November? We had an opening balance of 20 and each one of them was costing how much? 4. 20 and 4. Is that okay? So 20 and 4. So you write here in the balances. So 20 at 4. So meaning that the amount is how much here, somebody? Because that is the rate, cost per unit. Yeah. So then we go to the next date. So the next date, what happened in the next date? So from the table that we received, isn't it? How many? 140. And remember, this was on the 8th. Sorry, I forgot. This one here should have a line there. So on the 8th, we received, so let's receive this on the receipts area. So we received 140, and each one of them was what, how much? 4.4, isn't it? Each one of them was worth 4.4. So then are you able to tell me what is 140 times what 4.4? Wait, they're not talking to me. I don't know why. 616, eh? 16. So there are two ways. You could come and update your new balance now, because if you are 20 now, you have brought in one. So you can say we have 160. That's a bad approach. The best approach, you come and update the balances in accordance with the stocks that you have in the stores. So the oldest batch is this one here that has got 20 at 4, giving us 8, isn't it? And now we have brought in a new batch. The new batch has got how many? At 4.4, isn't it? Giving me 600 what here? So in the stores, I've got two batches. The oldest being the one of 40, and then now the new being the one of 140. So the new is on top now. Oldest, like that. So you come and don't add, eh? Yeah, just come like that. Yeah. After November 8th, ladies and gentlemen, what do we have there? After November 8th, we have another date. The online ninjas are not following. I don't know why. I can have a feeling that the online ninjas are not following. So, ladies and gentlemen, after that, we have issues, eh? So 12th November, we issued, isn't it? Yeah, we issued. So 12th November, we issued. So where do I write that issue? Here, right? Wrong. Issue is here. Yeah. And how many do we issue? How many do we issue? 80, right? So 80. Can we issue 80 at once? No, remember, we have a policy we are using. The policy is FIFO. FIFO is the oldest first. Mzee kabisa atoke, sini kweli. So ile mzee hapa ni gani, somebody? The one with 20, isn't 20 units with 80, yeah? So utaissue your batch kwanza umalize iende. So I'll issue 20 at 4, giving me 80. But now remember, in terms of units, I'm supposed to issue how many in total? 80. Now I've issued 20. So what is the balance here? 60. So the 60 will come from which batch? The batch of 4.4, isn't it? Yeah. So 4.4. So what is 60 times 4.4? 264. So we have here 264. So can we kindly update our balance? Remember now 20 has been issued fully. And out of 140, we have issued how many? So then what is left of this? So we are left with 80 at what rate? At 4.4, isn't it? At 4.4. So 80 times 4.4 will give me how much? 250? 352, like that. 352, like that. Then come and underline this. So now remember, you only have one batch, which is 80 at 4.4. Yes. 80 ya issue. Ama ya kwanza. Ya balance. Very good. Remember, we have issued 80, which is composed of 20 and 60. So this 20, we gave whatever oldest batch we had. Tukamaliza. So after Mariza 20, we are there at 60 to recover, which we have now recovered from this one, Kabaki 80. And it's coming from this batch 4.4. Thanks for asking that question. We go, ladies and gentlemen, to the next one. The next one now, what happened? Let's reason together. Let's reason together. We received, eh? I love receiving. I love receiving. Receiving. I received. So remember the date is 18th now, right? 18th, isn't it? What do we do on the 18th? We received how many? We received how many? 100. At what rate? At 4.6, isn't it? Yeah, at 4.6. So this is really easy. So 104.6 gives me how much here, somebody? 460, right? So once we receive, very easy, we book it on receipts, update the balance, update the balance, update the balance. So remember, MA, I don't know how you guys are finding this paper. It's a paper that you can really understand, and we pass all of us. All of us. So long as you are repeating yourself, for example, after the class, you repeat. Yeah, often. Repeat it to one term. CPO sienda mambo na two term. Ni aibu. Kuanguka ni aibu. Mimi siwezi kubali kuanguka. So mnasema itakuwa 460. So able to update balance. So utasema 80 plus 100 kweli? No, zinakuwa tofauti. So hapa itakuwa 80 at 4.4, 352. And then now we have here 100 at what here, somebody? At 460. And then you do what here? Now go to the next date. We see whether you can book it nicely yourselves. Go to the next date. We see whether 26th. I hope that is the last one, right? Great. I love this. So let's see whether you'll be able to book this right. Let's see whether we'll be able to book this right. 26th. And then I'll be able to give you some advice about studying, and being able to do so many things at the same time. You see, like myself, I run a civil engineering firm. I run an audit. I run RCM, 3 branches, virtually 4,000 students. And I'm just one person here, of course, with the help of teachers. But how are we able to balance these things? I have a family, 3 kids, looking to adopt 2 more. So let's see, ladies and gentlemen, what do we have there? So remember, we issued how many? We issued 140, isn't it? Yeah, let's go ahead and issue together. So we issue 140. So this one, can I go and issue? I mean, I can't issue 140 at once. Remember, it's first in, first out. So the first in here this time around, the oldest is which one? We exploited first. We depleted first. So we have here issue 80 at what here, somebody? Which gives us 300 and what here? 52. And then remember, in total, there was supposed to be 140. So now we have issued 80 here. So we issue how many? 60. From which batch? 4.6. So what is 60 times 4.6? 276, like that. So can you kindly give me an update balance here? Thank you so much. That gentleman asked a good question. So remember 80, we measure. So 100 tumepana ngapi? 60. So in this case here, we are left with how many? 40 at what here? At 4.6. Giving me how much here? 184. And that is it. So you tell us that the closing inventory has 40 units. The closing inventory has 40 units, each at 4.6. Total value is what here, somebody? So when you go to the income statement, yeah, so you'll be able to see there income statement. You see, we normally have sales, cost of sales. Cost of sales, we have opening inventory, add purchases, less closing inventory. So the closing inventory for that month will be this. 184, like that, sorry, yeah. 184, like that. 184, like that. So is that okay, ladies and gentlemen? Great, great. So then I'll be able to give you this concept of what is the closing add to different. Yeah, thanks, Joanna. I've been able to understand the question. What if the closing now, for example, what this person is asking, what if this was the closing stock? Now, of course, here you'll be forced to add, isn't it? Because the closing stock at the end of the day, you'll say it has got how many units? 180. And the total value will be now the sum of the two. Yeah, at times you can even have 4 levels. The last one, you must do the additions. The last one, you must do the additions. I hope you are well answered. Any other question before I disappear? But before I disappear, ladies and gentlemen, we must be able to know how to study management accounting. You see, whenever we are studying, ladies and gentlemen, yeah, for those of you who went, for example, to very good schools, national schools, yeah, It doesn't have to be a national school, but a very good school. Yeah. Maybe you're an A student, like myself. I've always been an A student. Yeah. So then what do? You must know, first of all, how to study the input. So input, I'm so sure there is nobody who has a problem. All of you in this case here, like now this class, you've been able to follow through. Now, the problem comes in here, the output. What we shall be giving to CASNEB at the end of the day is the output, isn't it? Some of you, of course, even after having taken you to units, hawezi kutumia units kwa income statement, Units, you can't take units of the income statement. So, ladies and gentlemen, in the output here, so some of us, of course, in this case here, in that particular paper, they may not be able to write anything. That's the unfortunate truth. Because in this case here, some people, you have taught them very well. But when they go to the exam room, they're given, in this case here, a management accounting paper by the invigilator. I don't know whether it is the color or the smell of that paper. Yeah, people start sweating, right? Yeah, like I've always invigilated during those old days. So you get a mzee like myself, somebody in this case of my age. So once you give them a paper like this, the very first thing you'll see is a calculator falling down. Yeah, and then of course, normally I'll always give them because I'm a humble person. Yeah, the moment you do that, all the pens on the other side, they go down. Then you realize that they are sweating from the wrong place. You would rather sweat anywhere inside there, but not from here. So you are sweating. Then at the end of the day, you end up writing nothing in the whole paper. Yeah, and then of course, now when the examiner says 5 minutes to the exam, you go at the back of your booklet and then you say, God bless the work of my hand. Which hands, honestly? No hands, isn't it? So you messed up. You messed up because of what your output. The output, ladies and gentlemen, if you want really to succeed, you must always use what we call reflection. Yeah, reflection, for example, like after you go from this place, I expect you to go and take like a blank page and ask yourself, what have we been taught by Dr. Aura today? It's about EOQ. Try remembering, try writing down, isn't it? But the best way of outputting your knowledge in a way that you'll be able to replicate it when you ask these questions in your exams is by teaching others. If you can't, like now, whatever I've taught you today, if you can't teach someone else, know that you have known nothing. Even the nothing you've known it wrongly. So you must create time and teach somebody, either through online or through what you're physically here. So you can say, for example, in this case here, we are 3 of us. We shall be able to have this place open like for the next 1 hour. And within 1 hour, we shall be able to do our ASA. And then, of course, you are teaching me, I'm teaching you like that. When we talk through these things, we really get to know them. You get to know them. If you remember in high school, like some of us, the high school went, I mean, every preps, it was about reflection. You must teach somebody something. I used to get not very well, of course, initially in mathematics. But when we exercised this concept of reflection, that you're doing like 5 questions every night and you're showing them to somebody, because if you can't show them to somebody, you know nothing. You must teach somebody, all right? And once you teach somebody, when the examiner tries to twist, because you see, when you're teaching somebody will be asking you a question. Even myself, I learn a lot through teaching. Yeah, somebody will ask you, how about this one is like, what will happen if this one is like this, like this, like this? At the end of the day, you're discovering, you're mastering newer ways of doing these questions. You may think that you know it all, but when you start teaching, that is when you realize that you know nothing. And you guys are privileged because currently, for example, you're connected, all of us, through this WhatsApp. Yeah, if you're not able to get somebody to teach, you go and look at a very good question, yeah, from your past papers. Do that question, take a snapshot and send it on WhatsApp. And then people will say that, you know, now here, this question, you've done nothing, useless. So in that process of being critiqued by these people, at the end of the day, you'll be able to understand even better like that. So please, we shall be proactive. We shall be proactive. It's very, very painful when you get somebody like today, somebody, came to my office and this person is telling me that I've tried FR and MA like this. How many times? 6 times. I mean, why? Are we learning rocket science here? I mean, these are very simple, straightforward thing. Like if you open your past papers, you'll start seeing in this case here, receipts issues all over. These are straightforward things. The biggest problem, what I know, because I've been in the 2 systems, structural engineering, civil engineering, and I've also been a student of CPA, what I know, accountants are lazy. You may not agree with me, but generally, accountants are what here? You see, like myself, When I sit down and I start putting up, for example, a building like this, looking at the structures beams, I can do the whole night. I can transnight very comfortably, and then I come to work. But accountant, hata akieka alarm ya 4 a.m. ilie, I'm 100% sure. I'm 100% sure. Ujama ataamka saa moja masambi, because alarm 30 minutes. Hata mwingine mwajakuwa kiomba, ndio tama nasikia kupata kama ombi kanaku. Anza kusema God the Father. Hata kabla aseme amen amela. Thank you so much. Please take that seriously. We should be able to pass one term. Bye. See you tomorrow, same time. Too much truth, right? We shall overcome. We shall overcome. And then, of course, I'll be able to tell you later on, when you finish this CPA, I'll be giving you a talk. When you finish CPA, what do you need to do? After CPA, we shall do ACCA. Have you ever heard of ACCA? Yeah, which one is better, CPA or ACCA? Both, no. You can't compare ACCA with CPA. ACCA is up there because ACCA is international. ACCA is international. So remember, ACCA has got 2 levels. We have in this case here intermediate, not intermediate, foundation. So we have in this case here foundation and then professional. So foundation has 9 papers, professional has 4 papers. So for ACCA, for you to qualify, you need to do how many papers? 13. Once you finish 13, and this is why I love ACCA myself a lot. Once I do these 13 papers, but I also made the same mistake you guys made. I also started with CPA. And then I did ACCA later. But if you do ACCA directly, yeah, once you finish those 13 papers, you'll walk to CASNEB and only do how many papers? 2. You're a CPAK. Yeah. And remember, ACCA has got 4 exams in a year. So even these papers, you can finish them very comfortably within 1.5 years. Yeah, very, very comfortably. But of course, now there is one problem. ACCA is harder. Yeah, ACCA is harder. People will cheat you that ACCA is cheaper. I've done both. So I know ACCA is harder. But now for you, you are lucky as well, because once you've done your CPA, in ACCA, we shall give you 4 exemptions. 4. So you'll do how many? 9. But once you finish those 9 papers, you'll be very lucky. You'll become a chartered accountant. Once you become a chartered accountant, you've done CPA, ACCA has also partnered with what we call ICASA. ACCA has partnered with ICASA, the Institute of Chartered Secretaries and Administrators in the UK. So once you finish this, you only do 1 paper here. And once you do 1 paper here, you go to ICPSK. They give you straight away that qualification. ACCA has partnered with CC. CC is Chartered Institute of Securities and Investments. Once you do this, you'll only do 2 papers here. And once you have now finished CC, like myself, you're a member of CC, you go to ICFA, you become, that's why I'm a member of so many professional bodies. Whenever I go to these interviews, like the other time they were interviewing me for CEO Kenya Airways, I never got it. I mean, I'm lucky, because if I got it, maybe I would have been bigger problems, right? Or even RCM wouldn't be there. So you'll always get people asking you, how comes you're a member of so many professional bodies? So what do? I can't tell them the truth. I cheat them. That I've been learning throughout, isn't it? Which is a lie. All those professional memberships, I got them because of what you're ACCA. You're only doing 1 paper, you become a member of this. Doing 1 paper, you become a member of this. So ACCA is a big passport for into a world of many possibilities. But we shall be able to walk together in this journey. First of all, we make sure that we pass MA, and then the paper you are doing 1, it's very, very bad. Failing a paper. Why? If you fail a paper like MA, even when we meet outside, they don't say hi. You just pass. I also pass my way. Thank you so much. See you tomorrow.